My name is Mike Sullivan. I'm a former IRS agent and teaching instructor with Internal Revenue Service. I was a revenue officer. I worked at IRS for a decade. I have been in private practice for 42 years. I'm an expert in IRS matters and tax resolution. I've been on many news stations, actually. Yesterday, 2 days ago, I was on News Nation. Anyway, I want to get, being a revenue officer, I've worked thousands of IRS cases, thousands. I can't even count the cases I've worked on. There's tips to filling your IRS financial statement out. It's really, really important that you hear this. God knows how many I've taken. God knows how many I've reviewed. Thousands of these the 433 and the 433F and the 433A OIC. I want you to realize that these financial statements determine your case. For you to go ahead and give IRS a financial statement without a pro, someone really good looking at that financial statement, trying to polish it up, make it look better, giving you these tips, it's worth its weight in gold. A matter of fact, I'm going to make a statement that you are a fool to go ahead and give. And this on small cases, no. If you owe under $50,000 and you've got to give IRS a financial statement, no big deal. Seriously, you're not going to really do any damage. But if you owe a large amount of money to IRS, you are a fool giving IRS that financial statement without somebody like me or someone similar to me looking at that. IRS looks at that financial statement and they are looking at certain things on it. A, does it make sense? Number two, does your income and expenses, do those kind of balance? Do the equity in your assets, are they really true? IRS looks for the stink on your financial statement, what doesn't make sense. If I look at your 433F, 433A OIC, 433A by itself, I will tell you if you're cheating, where it's at, where the smell, where the stink is. And probably in 15 seconds, it won't take me long to find out what does not make sense. Very few people, when they send their financial statements, are worthy to go into IRS because IRS will have a field day with your financial statements. Most of them just don't make sense. The two things IRS is always going to drill on is your assets and your equity in your assets. The other thing they're really going to drill way, way deep on your income and your expenses. Do your income and expenses actually balance? Is there money left over? Are you upside down? There has to be a balance to that. Page 4 on your financial statement, income and expenses. If not, that's a really huge red flag. So what's IRS going to do to verify this? They're going to go to your bank statements last 6 months, last year, and see if all this makes sense. See what someone good does is you polish the statement off. If there's things that are off, not making sense, you've got to explain those so you don't draw the ire or the sharper eye of IRS to look deep. If you owe a lot of money, do not. Well, you can do what you want. Don't give IRS that financial statement because you may. Oh yeah, one thing. Let me add one thing. I forgot to tell you this is big. IRS uses a national standard for expenses. So half of your expenses they're not going to allow. Go to the IRS National Standards table. Their table is for food and clothing, housing and utilities, car expenses, and car payments. IRS will not allow your expenses. They're going to substitute theirs in. Many times it leaves a surplus of income. That surplus of income goes to IRS for a payment. So be careful. If you want to do it yourself, go ahead, listen to a lot of YouTube, sharpen your pencil because IRS looks deeply because that is the essence of your case. Give me a subscription if you would. I probably know more than most people. Remember, I was the IRS. Give me a subscription. That's important to me. It'll help. Thank you.